It's time for the morning trade, and we're taking a look at Carvana, set to report its quarterly numbers after the closing bell today. It's been on an incredible run. Some thoughts here with Marley Kayden, taking a look at what the street is expecting for Carvana. Good morning, Marley.
Good morning, Nicole. Yeah, it certainly has had an incredible run, like you said. Huge turnaround story here. Up 113% in the last 5 years, up 65% on the year so far. They're doing really well. Big expectations here. EPS expected to come in at $1.10. Revenue expected to be $4.58 billion, which would be up more than 34% year over year. Wedbush issued a new note on them earlier this week, lifting their price target, maintaining a neutral rating, and saying that they do expect revenue to come in well ahead of consensus estimates, helped by strong retail unit sales growth and better vehicle profitability. They also said that they're on pace to report record EBITDA and retail units sold for the second quarter, which would keep them in line with their previously announced plans for significant full-year growth. So for Q2, analysts expect EBITDA to grow about 48% year over year, up to $524 million, with margin expansion likely to continue as well, up to 11% from 10% in 2024. They're expected to sell a 40% increase in cars. That's about 135,000 or so vehicles, and they have sold more than 100,000 vehicles for the last 4 straight quarters, which does make them the second largest used car retailer in the United States. There is a wild card here, though, Nicole. The wild card is tariffs. So this will be the first time we're seeing any potential impact here. Now, the president placed a 25% tariff on imported cars in April, then added another 25% tariff on used car parts in early May. Now, there are no tariffs on cars sold here, which is what Carvana does. So it could have helped their sales because used cars are cheaper than new ones. But there is a possibility that those rising auto parts could have increased their conditioning costs and squeezed their per parts profit. So we'll have to see how tariffs impacted their business. It could go one way or the other. That's the wild card in this scenario. But big expectations for Carvana today.
And Wedbush, hot on this name, but there are mostly buy ratings right here overall.
Yeah, as I'm scrolling down here, Davidson has a neutral, Jefferies has a hold, Stevens is overweight, RBC Capital outperform, Wedbush neutral, Evercore ISI in line, outperform from Blair. Lots of buy and overweight outperform ratings. I would say skewed to the buy side, but several holding neutral ratings as well. I only see one with it shorted.
Okay. Well, that's worth noting. Yeah, 13 of the 24 tracked by FactSet with a buy rating. Great to see you, Marley Kayden. 331 today for Carvana, and as you noted, an incredible run, up 151% for 1 year. Great run there, Marley. Thank you. We're going to trade Carvana now. Scott Bauer, CEO of Prosper Trading Academy, joins me for this special example trade. How would you approach this?
Hi, Nicole. Yes, as you guys just discussed, the stock's up over 150% in the last year. Can it go higher? I really think that it can. The company has just reported really nice results, and they've impressed investors with a successful business model, its plans for expansion, its recent growth in both revenue and earnings. And so from the fundamental side, things look good. When I look at the technical side, yes, the stock has made a great run. It's backed off a little bit. It's right down at its 50-day moving average. So I'm looking at that as support. The market is pricing in a move of about $40 in either direction. But I like the upside here. So I'm going to buy a call butterfly. This is a skewed butterfly, though, and it's called a broken wing butterfly. So essentially what I'm doing is I'm buying this week's 350, 365 call spread, $15 wide. I'm also selling, just to protect myself a little bit, the 365, 370 call spread. So I'm going to hopefully own a $15 wide call spread and sell a $5 wide call spread. I can pay about $3.25 to do that. Ultimately, I would love to see the stock at 365 or as close as possible at the end of the week. But I think there's a lot of upside here, and this is a good way to play a nice move to the upside. 325 is my ultimate risk if I'm wrong or if the stock goes down.
Okay, thank you for that. So a good example trade there for Carvana. and ahead of the numbers where, I've seen really positive comments. I mean, Wedbush noting likely to beat the estimates on unit growth, why the Carvana winning streak has legs. I mean, there's still a lot of really positive reports here on this name. We'll have to wait and see. In the meantime, some of your thoughts on the market action that we're seeing here.
I'm kind of surprised that it's been so muted ahead of the big week starting today, especially with the Fed earnings, jobs on Friday. I'm kind of surprised that it's been so muted. We'll obviously get some fireworks with Powell's speech today. Not going to be what the announcement is because they're not going to do anything with rates, but let's see what he says, especially after today's GDP print. And then the big guys, we've got Meta, Microsoft, Amazon, Apple. So we should see some fireworks the rest of the week. I still think volatility is too cheap. Good time to buy some downside protection.
What can you add how you're feeling in your sentiment and how you're going about your trades, Scott?
I'm cautiously optimistic. I mean, I think that's the way we have to look at it. The data that's out there is pretty decent. And, not that one data point makes your decision, but GDP today shows that things are, at least with that print, fairly healthy. Now, that probably means that gives the Fed more cause for pause and not to do anything. But the market looks healthy overall. But again, with volatility at these depressed levels, Nicole, I'm staying long, but I am picking my spots to buy some cheap protection to the downside just in case.
Understood. Scott Bauer, CEO, Prosper Trading Academy. Thank you so much. It's good to see you, Scott.
Thank you, Nicole. You too.